Welcome to this video. Today we're going to talk about whether Google stock can survive the massive AI competition right now. According to Apple, Google searches are down on Safari for the first time in 22 years, and the stock has declined 25% from all-time highs. However, if we look at the PE ratio, it's really cheap. Should you buy, should you sell? Can Google stock still go to the moon? Let's find out in this video. So why are Google investors worried about the stock? Let's first look at the charts. Here we can see that on May 7th, here you can see a massive red candle. It went down almost 8%. It closed almost below 8%. And from top to bottom, it was 10%. So it was a massive swing. Why was there so much panic this day? And what does this mean for the future of the stock? And because of this news, because Apple says that Google searches are down on Safari. So their core business is in danger because many people are not using Google search anymore, apparently, and people use ChatGPT or other AI bots to search the internet. According to Eddie Q, he said searches on Google via Safari were down last month for the first time in 22 years. And this is why the investors are so worried, because they're thinking their whole core business doesn't work anymore, and this is not good for the future. So that's a solid argument. Let's look at the revenue breakdown of Google. Here you can see that the majority of their revenue comes from Google Search and Other. So what is Google Search and Other? You can read here. This is revenue generated primarily from ads shown on Google's search results pages and other search-related services. So what this means is that, the majority of the money they make is through Google search. If less people are using Google search, then Google can make less revenue, which will decrease the value of their business. I think that this is an issue. However, Google knew this a long time before, and this news just created panic. They knew that they should diversify their income streams, and that's why they invest in Google Cloud a lot and a lot in, they have their Google DeepMind. They invest in artificial intelligence in DeepMind to compete with OpenAI, and so that's why, and they have a lot of cash to do that. They have the economies of scale, and right now everything is priced in. So even if you take away a quarter of the Google search revenue, I think the stock is still undervalued, but we will talk later about valuations. If we look here, so they're really busy with Gemini 2.5, our most intelligent AI models built for the agentic era. Anyway, they're not standing still. They understand that they need to expand and not only rely on their Google search income stream. Is Google a fundamentally strong stock? Let's find out. This is the S&P 500 ETF components charts. So the S&P 500 it tracks the top 500 companies from the United States, or basically the world, essentially. This is like the benchmark for investors. And if it's I would argue that if it's in the top 100, it's a pretty solid company. So Google is here at number 8. So at number 8, it means that they've done something right, else you don't get so high in this list with your business. Let's look at the Guru Focus. Here we can see at the financials, and here are all the metrics. You can find it here, and it says financial strength, 10 out of 10, profitability rank, 10 out of 10, growth rank, value rank, all very, very high. Revenue going up. It looks pretty solid, and even if we look here at how they make money, you can see that the net income is actually pretty high at 38%. So they have a lot of extra cash, so they can always do buybacks, or they can reinvest even more in AI. So this looks also pretty good. Now let's look at the economic moat. An economic moat is what protects the business from competition going in. So how strong is your moat? I asked ChatGPT what they think, and ChatGPT say it's a 10 out of 10. So that's pretty good. Let's look at the components. Search dominance, they give it 5 stars, over 90% of global search markets. YouTube, the #1 video platform, key advertising driver. Android, billions of devices tied into the Google ecosystem. Almost more than 50% of phones have Android. Google Cloud, this is 4 stars because there are cloud platforms that are more bigger and better, but this is a small thing that can grow later. But they have also fierce competition from Microsoft Azure. They have the ecosystem, AI, and data. We talked about Gemini. They are working on that, so pretty good here, like when it comes to economic mode. So it's a pretty solid investment so far. Is the company undervalued? Let's find out. Let's first look at the historical PE ratio because I think this is very interesting. It's right now at 17.03. So the lower, the cheaper. So if the PE ratio is low, it's considered undervalued. So according to investors, you should buy them. And it's interesting that if we look at the last 15 years, it's now 17.03, and it has never really been like, only here 2012 it was 17.12, so it's even lower than there. So in the last 15, 20 years, it's at a historical low right now. So it's super, super low. Maybe investors price in that the future growth is lower, and then even with a low PE ratio, the intrinsic value will also be lower because they think the company cannot grow anymore. Maybe it's like that, but if you look pure at because the average is like 25, 27 PE ratio, and it's now 17. So this is not, we are not like in a bubble whatsoever. So this is a bullish signal for because this means that the company is undervalued based on PE ratio. Let's look at what Guru Focus thinks about the whether it's overvalued. They according to this chart here, you can see that it's modestly undervalued. So it's undervalued, but it's not like super cheap, but it's cheap. And you can see here, like you can see here on the chart what their prediction is. Let's go to alpha spread. Like on alpha spread, they on the base case scenario, they say it's undervalued by 3%. That's basically fair value. So they don't think it's super cheap, but it's okay. And now and this is on trading view. Now we are on trading view. The 64 analysts offering 1-year price forecast for Alphabet Inc., Google, Class A have a max estimate of $250 and a minimum estimate of $160. So the price target is $200. That's like the average, and the max 250, minimum 250. So they have also a pretty, and here you can see they are pretty bullish here based on the fundamentals of the business. Should you buy based on technical analysis? Let's have a look. We are now looking at the daily candles on Google, and we can see that the 50 SMA has crossed below the 200 SMA, which is called a death cross. And death cross means that the trend has changed. So if we look here, we can see that here was downtrend, uptrend, and now it's kind of in a downtrend, or at the beginning of it. If we look at the 4-hour time frame, we can also see that here that this was a sell signal. You could buy here, and then here you sell because the trend has changed. If we look at the weekly channel, we are still in a long-term uptrend because it always looks like this on a great stock. On the weekly candles, it should look like this. This is very healthy. It just always going up like this. So it's very probable that we will see maybe a little bit lower, and then it will go all the way up. I'm already fully invested, but I will buy more if it reaches here. But I think that we will go maybe a little bit down because the trend has been down, and then maybe we'll make it like a double bottom, and then we will go all the way up. If we look here at the technical analysis, what TradingView themselves say, they say here it's a sell. This is that let's just first start on the 4-hour. The oscillator is neutral, summary sell, strong moving average, strong sell. On daily, it's all sell, 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 sell. On weekly, sell, 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 and on monthly, It's actually a buy. If you zoom out really a lot, if you're long-term view, I think it's almost, if you buy now, I think after 1-2 years you will be positive. That's a very high probability. It's almost impossible to lose money if you wait at least 2 years, because it's extremely undervalued right now. Because it is undervalued right now, and yeah, on the weekly candles, it's still on a strong uptrend. So should you buy or sell? This is my stock prediction. This is what I will do. I will buy right now, and I'll put my second position here at 137, and then I will just wait. I'm pretty sure that 1 year later, it will be much higher than 152, this business, because it's undervalued. It's still on a strong uptrend on weekly candles at least. Short term, it's bearish on the daily and 4 hour. It is a sell signal, but I will not be worried too much. So I will buy right now, and then at the second position at 137, and then I think it will all go up from here. So we can go either directly up, or we follow the short-term downtrend. We hit the double bottom, find support at the 200 simple average like this, and then we'll fly all the way up. And I think we can reach all-time highs in a year, maybe 2 years. So if you buy right now, hold for a long time, you buy a stock that's undervalued and a great fundamental stock that's undervalued, and you will be rewarded over 1, 2, 3 years. Thank you for watching. I hope you enjoyed this video. And yes, I think Google can go to the moon for sure.